I can read a lot about you on your website and what you do, but I think in your own words, are you able to talk to me a little bit about what you do and a bit about your investment strategy?
Okay, sure. I'm a portfolio manager at Wavestone Capital, and my day-to-day job really is about finding the right investments for our investors within the fund context that we have. We have an investment philosophy in which we believe that share prices over time will reflect growth in a company's earnings. We also believe that there's mispricing in the market, which is why we've got a job in terms of trying to find that mispricing and those little gems in the market that we can buy. And so we use our process to find those companies, and we call that process companies that have sustainable competitive advantage. And how we define that is we look for companies that have superior corporate DNA, and then we look at the industry in which they operate in. Is that facing a headwind or a tailwind? Because we find that that's really good turning points for share prices. So we then have in-depth analysis that we look at, discovering about that company's history and its outlook, but also the industry in which it operates in before we even look at the financial analysis.
Right, so taking that all into account, if we look back at 2019,
Yep.
were you happy with the year? Did it meet your expectations?
Wow, it was a great year in terms of shareholder returns for investors. You know, what a year. We were sitting here this time last year and it was in the doldrums and the market was down quite significantly and people were quite depressed about the outlook for 2019. So here we are, the market's up, 23% year to date. It's been a fabulous year for investors. Thanks very much to the central banks of the world, Federal Reserve Chairman, plus the Reserve Bank here chiming in with 75 basis points of rate cuts. And that really has fueled the stock market this year, as we've seen investors come into the market seeking income, but also seeking higher returns. So it's been a really positive year for the Australian stock market.
And is there anything that worked particularly well in your favour for your strategy?
For our strategy, the healthcare stocks worked really well. And we also got alpha or outperformance versus the market from being low weighting in banks as well. So those are the two key sectors for us that really contributed to our performance.
So healthcare is obviously quite a winner this year.
Yeah.
Everyone loves talking about their winners.
Yeah.
Was there a particular stock or a particular sector that gave you a bit of a headache this year?
For me personally, I had a real headache with Link administration, unfortunately. I should have seen it in terms of the industry headwinds that we're facing it. We're seeing within the funds management community the fallout of the Royal Commission, but also in terms of the industry super funds, they are starting to merge. And so we're seeing the impact that it has on funds administration businesses like Links.
And so looking forward now to 2020, are you thinking about making any big changes? What are those changes and what impact will that make?
Like again, we're always making changes, small changes to the portfolio depending on what's going on. It's not just because it's 2020 and here we go, another new year. And so the interesting conundrums at the moment are that what we can see in terms of the global economy is the bottoming, obviously, of the PMIs, and also the OECD lead indicators are showing some sort of stabilisation and some increase in positive factors going into 2020. We've been told, obviously, overnight by the Federal Reserve Chairman that he'll be pretty much on hold for 2020 in terms of interest rates. But don't forget, we've got the US election and all the drama that will entail over 2020, and just remember how big that had an impact in 2016 on the stock market. So that will be something that we are all watching in terms of that whole US political calendar. Clearly the trade war is not resolved, Brexit's not resolved, so there's a lot of things that you've got to consider from a macro perspective. But then here in the Australian economy, I would say, look, the GDP number clearly was disappointing at 1.7%, but you've got to remember 0.6% of that, a negative impact, was due to the drought. And we are obviously facing such a terrible drought, and now this impact of the bushfires, and I just really feel for the regional communities out there. And so that clearly has had a negative impact on the Aussie economy, but we're quite resilient, right? We've had a central bank reserve rates, cut rates, we've had the Australian government in a great position from a budget perspective, so they can do more in terms of fiscal policy stimulus. And we're just seeing the first signs of a bit bit of positiveness out there from Australian corporates, which is good. Domestically, what are we seeing in terms of positive, and what we're hearing is, people might not be buying a new car, but they're buying a used car. House prices obviously have started rising. That could lead to further listings in the new year. Things like that are really positive, early signs of some recovery in the Australian economy, which I think is good.
You spoke a little bit about the bushfires and about droughts, and I don't know about this, but this could be a long-lasting impact, and droughts and bushfires we could be seeing this for a long time to come. What are the long-lasting impacts of such an event like that?
Wow, it's just
for you at least, yeah.
From an investment community perspective, rather than it's the whole climate change debate, obviously, and the impact that is going to have. I think on Australians, and you can clearly see that people are wanting some resolvement in terms of energy policy, and that clearly has an impact on energy companies, but also mining companies. With this AGM season, we have also seen with BHP and that whole climate change and lobbying group, that whole clause that was heavily debated. So I think there are long-lasting implications of the drought and the bushfire season in terms of climate change, in terms of the impact that's going to have. But Australian corporates are responding. We've seen some positive things, like NAB has come out with the fact that in met coal for 2035, no more lending in that sector, except for remediation. So there are some positive signs. Australian corporates are reacting to the changes that are in front of us.
So if we go into some specifics now, so you've seen big companies have been in the headlines. You've got Westpac, you've got Telstra, banks. They seem to be getting into trouble. They seem to be on the decline. And then you've got these smaller sort of maybe tech companies that, like Afterpay, for example, that seem to be booming. So do you think that this is a continuous thing? Do you think this is just part of the cycle? Is it a cyclical thing, or is it here to stay?
The stock market is always changing. Okay, there's always, if you go back in history, you look at time in 2000, 1990, 1980, those top 20 companies are always moving up and down, right? So there's always new leaders coming through, and there's always, unfortunately, the fallout of these large companies as they go through their corporate decline. So we've even seen it, in our lifetime. Where's CSL gone from, nothing as little part of the government, and now it's the second largest company in Australia, right? Clearly a global leader in its market. So for me, I think it's a permanent change that in terms of the stock market and the way it moves through its life cycle. Afterpay is obviously a juggernaut. It's become not only a payments mechanism, but also a platform here in the US and the UK. So it's done extremely well. I can't get the valuation, but good luck to them. And then on the banking side, look, I think it's going to be a good 1 to 2 years for these guys to really work through all the issues. One of the major issues the banks face is their technology is not up to scratch. A lot of their systems need to be overhauled, and there needs to be further investment. And we're seeing that, they're already stepping up to the plate. You've seen major changes from NAB, CBA, investing. And I would just expect now with Westpac and what's happened with AUSTRAC that they would have to have further significant investment in their systems. So I think the banks are going to struggle for the next 1 to 2 years.
So in taking that into consideration, does that impact the way that you invest and the way that you construct your portfolio?
Oh, definitely. So when we manage our portfolios, we have a minimum position of 1%, a maximum of 10% in any company. We do put them in buckets of large, mid-cap and small cap. So we're looking for the best in each of those sort of liquidity profiles. And within our stock selection, that's what we're looking for. But of course, it's a living thing. Things are moving. So we definitely take that into consideration. And like going back to our process, we're looking for those companies that have sustainable competitive advantage, right? So we want to see that growth over the medium term. We generally look out 5 years. So we want to see that growth come through.
So there's a perception at the moment that technology isn't really a strong point for Australian companies. Do you agree with that? And do you think that Australian companies now are doing a better job in utilising that technology?
So I firmly believe that every company needs to continue to invest in technology, and the way the economy is moving as a digital economy. I think every business is benefiting from that, and we're seeing major changes amongst corporates in terms of their step up of technology, whether it be in their sales systems, whether it be in their payments platforms. So we're seeing dramatic change, and you've only got to see what you do yourself in terms of how you use your mobile phone, and everything is in your pocket, whether it be your wallet, your entertainment in terms of games, etc. So the world is changing, and I think Australian corporates are responding to that. It's one of the questions that we continually ask, what are you doing? What are you spending on? How much are you spending on hardware, software? What about cybersecurity? What about the threat? What are you doing with our data? That's one of the things that I'm passionate at the moment. That whole privacy data piece is really important to me as well. I want to see consumers protected, right? So we constantly talk to corporates about that as well. But I don't know if Australian companies are behind the curve. We don't have many global leaders in terms of technology leaders. So, maybe Atlassian, Afterpay, Xero, they can be named, EML in terms of the payment space, can be named as, global tech companies that are taking it, up to the leaders. But we don't have, obviously, the big stocks here.
And you've mentioned, obviously, before with Livewire, but also just now, how important a company's DNA, if you will, is when you select which companies that you're interested in. So is there a particular management team or company that you can see that's really utilising technology well?
Utilising technology well, or making the decision to use it. Like, I think EML Payments is one that we recently invested in that has done extraordinarily well in that whole new payment space. And they're a partner of MasterCard and Visa. They're using these payment solutions, and they are providing those industry solutions. So they're all those different verticals that people want to go into. So when they need a payment solution, rather than going to MasterCard or Visa, they go to EML. They're referred to by MasterCard and Visa to solve those issues for those particular industries. So I think they are becoming a new global leader in that space. Other companies, I think every industry has got, their champion and their leader, and they're all changing, whether it be ASX in terms of the stock exchange, NAB's new investment in technology, and CBA has done particularly well on the banking side, but they're all having to step up. Woolworths has done a lot, with Quantium and on the data side. So everyone is embracing it.
And I thought we could finish off by just doing a few quick fun questions.
Oh, okay.
So 2020. Are you bullish, bearish, neutral, and why?
Look, I believe stock markets over time will, rise. Okay, we've had a terrific run, right? So we're due a pullback, but we're in a low growth world. So my view is that if we have a pullback, it's not going to be this major correction, unless there's some, major inflation shock or something that, totally derails things, a black swan event. But I do think that, the market's had a terrific run. We could have a bit of a pullback, and then it goes on from there. There's enough opportunities in the market to keep it going. The other thing that people are underestimating is just how much cash is moving into the stock market looking for income, because they can't get it anymore in terms of their term deposits and the cash rates they're receiving in the bank.
You mentioned black swans. If we flip the question and talk about white swans, something that could go really well this coming year, something that could make the whole year fantastic, what would it be?
It has to be a recovery in global growth, and it has to be a recovery in, some resolution on trade talks between, the US and China, and then therefore a recovery in the global economy. But careful what you wish for, because that obviously means that we could get a sell-off in bonds, and then therefore valuations could be on the other side. But I would say a nice gentle recovery in terms of earnings, that would be the best outcome, rather than some sort of shock, positive shock to the global economy.
So Wavestone is a part of Future Impacts. So do you mind going into depth a little bit about what Future Impacts is and what it's doing for females coming into the industry?
Future Impact is a consultancy that has brought together industry super funds and fund managers with an aim to change the dynamics within our industry. The issue in our industry is that we're about 90% male and 10% female. So the view is we need to get awareness out there, particularly at the university level, that investment management is a career and that it is a rewarding career and something that women can do equally as well as men. And so these fund managers and industry super funds have come together to try and get that and build that awareness at the university level.
So I'm 20.
Yes.
What advice do you have to a 20-year-old female who is interested in the industry but not sure which steps to take?
Right, well, first up, you've got to have a degree, right? So
Sounds
tick.
good, yeah.
Second, you've got to do a lot of reading, okay? You've got to read a lot of the investors' names that you hear about from history. So, the Warren Buffetts, the Peter Lynch's, you've got to read Howard Marks, you've got to get in there and read as much as you can, because a lot of that practical stuff is not taught in university. You should start your own portfolio, start investing, take a small amount of money and start doing the research on those companies and working out what style of investor you are. You don't want to gamble, you don't want to punt on stocks, you want to understand those companies and what makes them tick. Why are their earnings growing? What valuation am I paying for these earnings? Do your DCF models. Really understand all the different levers. So because one of the things that fund managers like to see when they interview young 20-year-olds is they want to understand that you understand what the job entails, which is picking stocks, right? The job is absolutely fantastic. You never stop learning, right? So it's such a great job from that perspective. You never stop meeting new people. You are lucky enough to be able to travel, whether it be interstate or globally. You get to mix with the C-suite, with corporate Australia. These people are the brightest, and most powerful people in Australia, and you actually get to challenge them in terms of their strategies and get to understand and follow those industries and businesses for a long period of time. If you're successful enough and you get to the top and you can become a portfolio manager, you can either have your own business or go into a big, large fund. So there's plenty of career opportunities, but the wonderful thing about this job is you come into work every day and you do not know what is going to happen, right? So that is absolutely great. You can have your day planned out and then suddenly there's a takeover bid or someone wants to make a investment and they require equity and you've got to participate in that equity raising. You're downing tools and focusing on that event that has occurred that day. It's wonderful.
Okay, so final question, and this is a bit of a favourite question for us. So what's the one stock that you have on your watch list that you'd love to own, but at a lower price?
Zero. Yeah, that would be the one. At Wavestone, we don't buy anything that's not profitable. And for us, that stock just took off, just as it was moving into profitability. I think the business is a great business. It's been very well run and the business plan's been very well executed. It's a global leader, obviously, in accounting software, and it's performed extremely well. It was just too expensive for us.
Well, thank you very much. Lots to think about. Thank you so much, Catherine.
You're welcome.